Digital tokens similar to cryptocurrencies that are issued by central banks are known as Central Bank Digital Currencies. They are linked to the value of the fiat money used in that nation. CBDCs are being developed by numerous nations, and some have even put them into practice. Understanding digital currencies and what they signify for society is crucial because so many nations are looking at how to make the transition to them. Now, CBDC has an intended and unintended effect on a country's economy. Thank you for watching Diversified Streams, your go-to YouTube channel for all things crypto and finance. Be sure to check out our community post about these subjects. We are curious to know your opinions on these matters. Also, if you haven't subscribed yet, click the subscribe button so you don't miss out on the latest news and tips related to crypto. And make sure to keep your notifications on so you'll be updated with our latest videos. We frequently post so you wouldn't want to miss them. In today's video, we will be talking about central bank digital currencies and their effects on society. We are going to talk about the implications, challenges, and future of CBDC to our lives. So, what are we waiting for? We have a lot to talk about, and there's no better time to start than now. What then is a central bank digital currency? Simply explained, it is a digital payment token that has full backing from a central bank and is issued by the bank. Oh yeah, and that payment method often makes use of a blockchain, and it is also regarded as legal tender. Surprisingly, around 70% of all central banks worldwide are now engaged in some kind of CBDC research. Even the Fed is currently looking into a potential central bank digital currency. In actuality, several of these central banks are analyzing a wide range of various models. CBDCs have sparked the curiosity of numerous central banks. But that raises the question, why are global central bankers so interested? The first of the three key reasons is efficiency. By that, I mean boosting a society's payment system's effectiveness. For instance, we are aware that the day's end net settlement is the foundation of the current international payment system. However, we can now have real-time gross settlement thanks to blockchain technology. So absolutely, there can be significant implicit cost savings from it. Simply said, logistically, deploying money would be a whole lot simpler, less expensive, and quicker with a CBDC that the central bank controls. Financial inclusion is the second factor I believe is driving the central bank's experimentation. The traditional system frequently involves middlemen like commercial banks, especially in emerging markets. These frequently fall short of meeting the needs of sizable portions of the population. Many people are now left without access to banking services and with little or no financial options. With the elimination of those commercial banks made possible by CBDCs, more people will have access to the financial system in these developing nations. This would fall under the requirement to establish or defend a type of monetary sovereignty, which is the final reason I believe they are looking into it. The Marshall Islands, who have used the US dollar as their currency since becoming a democratic country in 1979, are a prime example of this. One of the main drivers behind the Marshallese CBDC is their view that creating their own currency is a method to declare their own sovereignty. Let us not overlook the current rise of international stablecoins like Facebook's Libra, which poses a serious danger to monetary sovereignty. Therefore, some central banks may consider CBDCs as a means of reducing that threat. All of this takes me to a crucial query. Why is blockchain being considered by so many central banks for these new digital currencies? We've been considering the nature of money and its different components ever since Bitcoin and the financial crisis of 2008. It is employed as a unit of measurement, a store of value, and a medium of trade in that sense. Blockchain strikes a fair mix between the privacy qualities of cash and the security policies of deposits, which is what makes it so alluring to us for any kind of digital currency. That appears to be something that central banks value at the moment. Now that we know the basics, I want to ask what you think about CBDC. Do you support the creation of CBDC? Let us know what you think by sharing them in the comments down below. Also, while you're at it, show us some love and appreciation by giving this video a big thumbs up and subscribing to our channel. It helps us big time with the algorithm. You'll be doing us a big favor. Now that you are familiar with the fundamentals of CBDC, I want to analyze the broad ramifications of a successful CBDC. We must distinguish between the advantages for central banks and the advantages for the general public when discussing the possible viability of central bank digital currencies. In actuality, these advantages differ greatly depending on the nation in question. Cash is convenient to use and accessible in many developed nations. Cash, however, can be quite challenging to come by in many developing market nations. Some folks might have to travel very far to go to that ATM in order to utilize it. Because muggings still happen, having cash can be risky. However, those issues are now a thing of the past. If CBDCs are effectively implemented, all of that cash will be converted to digital forms that can be used solely with phones. Therefore, consumers of CBDCs truly gain immediately from ease and security. Adoption is another factor impeding the use of digital currencies and payments in general. Government endorsement of the new payment method is one way to solve the adoption issue. If governments did this, the payment channel would likely experience rapid and widespread adoption. Due to the decentralized nature of blockchain, there are also a ton of things you can do with a digital currency that are simply not possible to perform with cash or even electronic legal tender. This actually brings me to the most significant factor that could make blockchain technology so vital for CBDCs. It all comes down to who owns what. A CBDC, like cash, notes, coins, and electronic legal tender, is on the central bank's liability side. These are not central bank assets. This implies that these assets represent claims made against the central bank, similar to how holding a crisp $100 bill constitutes a claim. Consider this. The owner of a central database, which serves as the transactional ledger for an entire nation, actually acquires ownership of the national currency. They are able to alter every entry in the database, which is the reason why. This indicates that CBDCs are an asset rather than a burden. Now, most people would concur that in order to truly run a successful CBDC in a manner that is consistent with their current legal frameworks and accounting standards, the use of a blockchain or other decentralized system is essentially required. The main functions of central banks benefit greatly from the establishment of such a system. What then do central banks worry about with these mandates? Well, price stability would be the first. The stability of the economy would be the second. Finally, there may be mandates like employment in some nations. Thus, the question arises, how might a CBDC assist a nation in achieving price stability? In terms of metrics of economic activity, digital currencies enable you to take a considerably greater portion of the economy into account. We currently have a sizable portion of our economy that is fully digital and is increasing quickly. The issue is that using conventional metrics, value creation in the digital sphere is difficult to account for. Because of this, many of the prices we encounter in the traditional market do not correspond to those encountered in the digital economy. But whether we have a currency, a payment system, or a means of transaction that serve as the foundation, you can much more effectively target that sector for economy now that we have a new digital economy. CBDCs can be of assistance in this situation. Despite all of this, there are still a number of issues facing CBDCs, and nothing is entirely resolved. So, let's look at a few of these right away, shall we? The first significant issue I want to address is its usefulness. I am not referring to whether or not users can access an app on their phone or retrieve their private keys when I say this. What happens if one of those trying to transact doesn't have a smartphone? This is the more urgent concern, especially in nations with emerging markets. How can you enable digital payments for folks who just have a regular phone? Who doesn't own a smartphone, you may be asking yourself at this point. For instance, just 51% of people in South Africa have smartphones, while 40% have basic or feature phones. Now, these might appear to be modest smartphone penetration rates. In terms of smartphone ownership rates, South Africa is really among the better nations. The main lesson to learn from this is that most people worldwide do not own smartphones. It is a difficult task to figure out how to offer straightforward payment methods to those with low-end phones, or even those without one. However, if CBDCs aren't being widely used, it is a problem that kind of has to be resolved. Privacy is the second major issue facing CBDCs. It is true that there are numerous blockchains that protect user privacy. There is nevertheless a privacy dilemma. On the other hand, a central bank is similar to currency because it protects anonymity, which is beneficial for resistance to the state. On the other hand, there is legislation governing payments beyond a certain threshold, and this includes KYC and AML. One option to reconcile these two seemingly incompatible points of view is to combine audibility for transactions with higher values with privacy for transactions below a specific threshold. Now that you know the implications and challenges surrounding the creation of CBDC, it would be easier to discern whether you will support it or not. Just a friendly reminder that economics is a very complicated matter. It will be hard to say whether the goal of CBDCs will materialize or not. So, when they come out, try to remember that you should only invest what you can lose. And that is it for today's video. I hope you found today's content insightful and informative. If you did, you can show us some love and support by liking this video and subscribing to our channel. Make sure to have your notifications on so you will be updated when we post our videos. Thank you very much for tuning in, and see you in our next video.